all for having me. My name is Will Wiseman, CEO of Climatize. And to start, I'd like to share the story of Climatize. So in 2019, my co-founder and I joined the global climate strikes in Barcelona, and we saw 100,000 people protesting for climate action, but were struck by the sad reality that everyone was going to go home, and the next day, nothing was going to be different. So as we dug in, we uncovered three problems. Unaccredited investors don't have access to the clean energy asset class. People don't have time to take climate action, and there's a breakdown in trust with respect to traditional finance services. So we're seeing strong market signals in this space. Our target demographic is growing into their financial capacity. They want sustainable alternatives, and this is the topic that they care about. So for millennials and Gen Z who feel climate anxiety, Climatize provides an easy and automatic way to invest in profitable climate projects. We enable the climate movement to organize financially and socially. You can actively invest or simply set the roundup to automatically invest the spare change from your everyday purchases. And you can see who of your friends and community is fighting climate change with you. Finally, by using Climatize, you get discounts at our network of sustainable brand partners. So here's a few reasons why our customers love us. First, Climatize is accessible to every financial capacity. Next, we take all the thinking out of climate investing through weekly and monthly investments or even micro investments. And finally, your money goes directly to funding the projects, so there's no greenwashing. Some companies have tried crowdfunding for clean energy before, but key changes make the timing right now. The first reason is a rapid increase in public awareness on climate change in comparison to when companies like Mosaic and Wonder Capital launched. In March 2021, the SEC increased the ceiling for Reg CF from $1 million up to $5 million. And this unifies regulatory conditions from the EU, where this is a very mature business model, where now we can be a first mover in the US. So we've identified over 9 million ideal customer personas whose spare change in a year would be over $2 billion. From this, we can capture over $200 million of revenue. After that, we'll target Europe, India, Africa, then Latin America. Through our Good Climate News channel, we've seen a 400% increase in views per video and a surge to our wait list, over 80% growth in the last quarter. That's been purely organic, zero paid marketing, only using a video editor. Yesterday, we signed our 11th letter of intent. We have a partnership with the US Department of Energy. Our wait list is growing 21% month over month. We're onboarding customers to our beta at over 50% week over week. We've crowdfunded a solar array in Kenya and are funding 12 projects for low-income families in Hollister. We have 16 partner brands, and we've won 3 global awards in the process. So we're taking this, really looking at local networks to then be able to scale to a global movement, engaging the Sunrise movement. Each one of those hubs can be anywhere from 500 to 10,000 individuals. So from that, using a B2B approach to B2C acquisition. How do we compare to our competition, you ask? Well, first, we're delivering the product through their channel of choice. Additionally, we have this roundup feature, which at face value is just a painless way to invest. Really, it enables us to forecast our investment volume and revenue. Additionally, we get that transaction data so we can strategically choose our brand partners. Then additionally, we have the social and gamification components that really show you where are the people who care. And finally, we've created a secondary liquidity strategy that we'll be rolling out over the next 18 months. We have 2 network effects in parallel. One is that as we gain more capital, we get more visibility, more projects, and thus more relevant to you and your community. And additionally, there's a financial transaction data, which gives us better rewards. Finally, how we monetize. On the project side, we take a success fee and a loan servicing fee. On the B2C side, we have a freemium model and our loyalty program. The co-founding team consists of myself and Alba Forns. We both hold double master's degrees in renewable energy engineering from the Royal Institute of Technology in Stockholm, Sweden. I have 8 years of clean energy experience. Alba was a key player in creating Barcelona's low emission zone. We were just recently chosen as Young Global Changers by the World Policy Forum, and our team has worked at some of the top tech and financial firms in the world. So we're currently fundraising. We currently have 40,000 left of an allocation in our angel round. That's at a $5 million valuation, and we're ratcheting that up thanks to our selection in Techstars Boulder. This is our chance to own our future, and here are the people demanding action. Let's give them the tools to fight for a sustainable future. This raise will get us to our FINRA approval, to 10,000 customers, and who in turn will invest $1 million through Climatize. Finally, I want you to think about this. At the moment, there is no network product for climate. It's a theme that touches every vertical with opportunities in every sector. Empowering the public to invest in the energy transition is an untouched niche that isn't a niche. Thank you, and let's make every transaction an investment in climate action.
Someone's got a practice pitch. The time is just up now. Great job, Will. Thanks for sharing what you guys are doing. It's fascinating. I see a ton of massive potential. I want to bring in our fellow panelists. One quick question, just while I'm bringing them in. You had a bunch of impressive names for investors. Mm-hmm. If you're only raising 500, why do you have so many investors and still space? Why did people put small checks?
Mm-hmm. Yeah, so we raised from the Central Coast Angels, an angel syndicate here in Santa Cruz. From that, they started out with just early checks. We were still pre-FINRA, pre-product at the time, and that gave us then the finance to be able to not only launch our beta, which we have done, we are now submit ready on our FINRA application. So just risk profile early on. We also started raising right as the economy drove off the cliff. So we've been fighting an uphill battle, but in that sense, still making good traction. And then we plan to actually raise more like 1.5 to 2 million coming out of Techstars. We're just closing off this 500K. This will get us through program and essentially just give us the funds that we want to really build a product that we believe in and have the vision for.
Awesome. Thank you for that. Now, Pippa or William, I'll hand it over to you before I throw in a few more questions.
Hi, Will. Thank you. Obviously, great, very polished pick. So what I think I'm getting is that you're saying this is unique because you're offering the opportunity to retail investors to invest in sustainability projects in a way that they want to. So putting in little bits at a time, and that you've got the liquidity to get that back. So that's how it's different from something like Wonder or some of those other competitors you're talking about.
Mm-hmm. Yes, exactly. So Brian Bursick, the former founder of Wonder Capital, is actually my CEO mentor. He really loves what we're doing because, he was very passionate about actually engaging this space. But back in 2014, the public demand was a challenge and the liquidity was a challenge. Mm-hmm.
But they've done a great job, and other people like Mosaic, like laying that foundation. So how about something like Atmos, where it's a current account, but they're basically taking the money in your bank account to do this good work behind the scenes?
Mm-hmm. Yeah, I think to your point, the big thing is the behind the scenes. So people are, they're even within Atmos, they want to see what their money is doing. And there's been that breakdown of trust with these financial services. So in comparison to having your money in a mutual fund or an ETF, where at best you get a stock ticker, with each one of these, we have the photos of the 12 families whose homes we're putting these solar arrays on. And there's that real emotional connection with these projects. We're focusing on projects that have high social impact as well. So for example, one of our letters of intent is with Block Power. They do energy efficiency upgrades for low to middle income communities. Those are really compelling stories. And with that, we're kind of building that with our Good Climate News channel, where we've been sharing the successes of not only innovative companies in the space, but the projects that we're funding as well as our products. So with that, you could see the storytelling being a little bit like Kiva, and it's a platform I've been lending through for over 12 years. And that kind of emotional response that you get when you actually know the project that you're funding in and the impact that it's creating is a very different value proposition than your money just sitting in a savings account.
So I hear you, and it's lovely. I think people will be that engaged. Some people will be that engaged, at least initially. I think, I used to use Kiva as well. And frankly, after a while, you're like, this is great. And then you forget to relend the money or, so I think that sort of wish to be that so engaged, I think that tails off with time, that kind of enthusiasm. I guess that's the point of your kind of auto, roundup feature. But, I think that for me is the attraction of something like Atmos, where it's just a current account and everybody needs a current account. And I'm not having to then think, oh, I want to do this great thing as well. And I've got to make a separate account with Climatize to do this thing that's a bit like savings, So, I think that's going to reduce the number of people that understand and are interested in your product. So, interested to know what sort of responses you've had from people when you've done your customer discovery.
Mm-hmm. Yeah, so it's also a great question, and a good point to kind of zero in on here is that it's actually not Atmos or Climatize. You can do both. We are bank and card agnostic. So, if you want to be earning money on this micro investment model, you can be doing that while the core of your savings is still sitting in a green bank. So I wouldn't say that it's one or the other. And then additionally, I think because that sell to move to Atmos or one of these larger green neobanks, that's a very high friction customer acquisition. To actually have the trust in which you move all of your money from bank to bank requires a lot of customer education as well as relationship building. And so from that, that's why we see their customer acquisition costs being an order of magnitude or more higher than actually what we're paying.
Okay.
Are you worried about the early adopter effect of getting the easy ones in?
Exactly.
And you're so like HelloFresh and all of those companies, the delivery companies?
There's a few in the UK who've tried to do this kind of thing where basically they're trying to get people to sign up to do sort of some kind of savings or fund investment that is doing good stuff. And of course, it's great. It's a good structure, but there's kind of two risks. Firstly, that you need a reasonably sophisticated consumer to even have to get engaged and to have savings and to want to make an investment. And then if your idea is any good, then there's a lot of other companies who could just build this as a vertical on what they've already got tomorrow. And I know you're going to tell me that there's trust issues with some of those providers, and I hear you, and I think you're right. But there's also trust issues giving my money to a startup, right? So I think there's quite a lot to unpack there.
Mm-hmm. Yeah, and you both have great points here. So with respect to our go-to-market strategy, our 0 to 1 is primarily women already working in clean tech. They have existing investments, generally 30 plus and earning slightly over 100,000 per year. That's kind of 0 to 1. 1 to 10 is the sunrise movement, like I mentioned. So that is over 100,000 individuals who are highly, highly engaged on climate here in the US. As an activist group, they're also very organized. I spent a year in Europe organizing with Fridays for Future and working actually closely with Greta Thunberg in Stockholm while I was studying there. And, I recognized that activist movement is just very different in the way they organize. The US one is much more about policy and finance, which is why it's a good fit for what we're actually selling. With that, we look to actually draft onto that existing community and become then their tool of choice. As we prove out that B2C traction, we can actually go then in 10 to 100 by taking a slightly more B to B to C approach by engaging more like the credit card companies or existing financial institutions and being more like their white label bolt-on climate solution. So for example, 2 days ago, I was pitching to Amex Ventures. Previously then in November of last year, we were finalists in the Climate FinTech Challenge. Through that, we made connections with MasterCard and Barclays, both of which signaled interest in having this kind of be their sustainability project. But we needed to prove out that B2C traction first before it would then have sufficient volume to kind of be meaningful for them to pilot. That's also where the kind of sustainable brand concept comes in, is that's a secondary product for us. We are kind of building that out over time as we build up our financial transaction data. We can take a very targeted approach to the brands that are especially relevant to our customers. And then from that, you could think of that almost like airline miles for climate.
Wait, I need to double. Go ahead.
So I think there are going to be real challenges ahead to spreading to getting customers on board and growing and scaling this idea. I think it's I think the idea's got a lot of potential, but I think I think you need to really think critically about why this is going to succeed when there are quite a lot of other companies in the space that have tried and haven't really got traction yet. Also, I'd argue that a lot of people who are going on marches and whatever, are they the people who have the capital to invest as well? So maybe they are, but this will be this needs to have mass market appeal again for it to have legs. So yeah, but really hope to see you succeed. I think there's a really strong idea in there.
I need to double click on the Greta Thunberg part. So if you were working closely with her and other players in the space, why not try to bring them in as advisors? And even if they're say, oh no, I can't do that because there's financial complications, etc., then have their advisor shares go towards some type of trust focused on climate. You get the people who essentially command hordes of climate activists, and that's enough where you get all of the traction that you need. Even if they are having small account sizes, you would kind of roll.
Mm-hmm. Yeah, well, for two reasons. One, they don't endorse anybody. Just across the board. It allows them, by saying no to everybody, they don't have to then justify why they say yes to one person or others. Then additionally, they're in Europe while we're headquartered in the US. So within the regulation crowdfunding framework, run by the SEC. We can only really run US headquartered companies as well as US investors. In time, we can run Reg S raises, which allow us to bring in international investors so we can kind of expand our investor base. And then additionally, we do look to expand to Europe once a piece of legislation called the Regulated Crowdfunding Service Provider. And it essentially lowers the barriers between any of the countries in the EU to then be able to have a cross-block platform. Whereas at the moment, if you are headquartered in Germany, you can only fund projects in Germany. In 2 years, that legislation has been passed, but there's a 2-year implementation window on that for all the regulators to actually implement it. Once that is lowered or that barrier is lowered, we plan to look into an international expansion strategy.
So are you putting together an entire payment platform like Acorns, where you give out people like a physical and digital debit card and you're actually taking the spare change? And if so, what's the cost to spin up a new customer, not just in terms of acquisition, but also to onboard, get the person spending and send out that card?
Yeah, so we do not have to spin up our own card. We are bank and card agnostic. We use a cloud integration that allows us to be broad in our reach there. We see that roughly $5.50 customer acquisition cost, and then we have roughly $1.70 on our Plaid account linkage, as well as KYC and AML checks on top of that. So we see roughly a 4-month payout if someone is on a 6-month repayment period on a new customer when it comes to the free tier. And then if it's premium tier, which was the $1 per month model, then that's more like 4 months.
Okay, and so the people are not really doing spare change on existing payments. They're just, you're basically saying, I want to put $1 or $3 or $5 a month into this. Is that correct?
Not quite. So the spare change model, we're tracking those incoming transactions. We're digitally accounting them until they add to $5. Once it's added up to $5, we push those funds into the escrow account. It allows us to standardize our accounting on the back end and create a standardized financial product as well. So you could think of it kind of like stacking green bonds.
Got it. Okay, and how do you make money?
We take 5% of funds raised. I'm happy to show the screen here again.
So it's not based on, so it's on a crowdfunding model as opposed to a performance-based model.
Yes, exactly. Because we're doing project finance here, we're not looking to do clean energy startups. With that, it allows us to just mitigate the risk on any of the funding that we provide. And additionally, getting equity in a solar project doesn't really have an enormous amount of upside. So for us, we see the project finance model as, the project finance vertical as an area that will need to grow by $700 billion per year, according to John Doerr, in the next coming years. So that's a space that, as we look to accelerate, especially solar energy efficiency and battery storage, these are areas in which that CapEx will become valuable. And to be able to bring in the public as an investor, that pool of untapped retail capital is somewhere that we've seen an enormous amount of potential that no one has dug into successfully.
What prevents someone like an Acorn or Robinhood or Revolut from just adding this as a feature?
Yeah, so for one is the regulatory requirements. You have to go through a new set of approvals and whatnot. Additionally, there's knowledge capital. Project finance, clean energy project finance is very different from what you might be looking at in the public equities market. So you would need to then build up the human capital, knowledge capital, and relationships to be able to get these allocations in a deal. So this is not as simple as it seems. You know, that's kind of the beauty of it, is to put your spare change towards clean energy projects seems like a very simple project, and yet the actual back end and execution of it is not.
Why are you going about building this as a business and a platform as opposed to an integration that can be plugged into existing finance or fintech companies stacks?
Yeah, so as it stands at the moment, we have the potential to be a standalone platform. And because of the global scale that we're looking at, we need to have those regulatory approvals. We can't really be a bolt-on to, say, a Chrome extension or Shopify because of the regulatory side that we need, as well as then managing your wallet and payouts is something that requires a significant amount of platform building. Over time, to your point, we may be able to bolt on to, for example, like I said, an Amex card, a Visa, et cetera, and become a sustainable loyalty rewards program. Although early on, I think it's to our advantage to be a standalone platform.
What's your next 3 product features in terms of increasing lifetime value of your customers?
Yeah, so the next 3 features are really around, at the moment, we have the micro investment model. We're adding in weekly and monthly investments. That really caters to just a different financial capacity. The micro investments is really appealing, particularly to Gen Z. As we then work up in people's financial capacity, weekly, monthly is appealing. Then it's the social features to be able to then actually see who of your friends and community are investing alongside you. Throughout customer interviews, a reoccurring pain is where are all the people who care? And from that, who of my friends care? So we really want to be able to create that kind of personal experience to see like, hey, here's Matt, I have him in my contacts and I see that he's actually funding this project with me. Then beyond that, it's to be able to see the impact of each one of your investments based on the projects that you're funding. So the carbon avoided by that project and kind of what does that represent in terms of user-friendly metrics, houses powered, plane flights avoided, et cetera.
I think there's a major possibility here in your freemium model for advertising for brands that want to get in front of sustainable oriented customers so that you can offset costs or even have additional revenue models.
Yeah, definitely. And that's why we've seen such strong traction with those sustainable brand partners. So with those, we signed those 16 deals in less than 90 days. So not only are they willing to pay us for any transaction volume that we move their way, but through that, they are an additional incentive to our users.
Very interesting. Very interesting. You could do a lot with raffles as well in terms of getting people onboarded, having brands give away things, getting free cards, etc.